Hey everybody, welcome to Trade Capital's exclusive daily analysis video. Today is currently July 31st, and as we kicked off the final day in the trading month, we will be rolling into August. Now, August we have to be very careful because it tends to have some seasonality weakness in the overall indices, and considering how extended we are still on the daily charts, we really haven't pulled back even to the simple 20-day moving average sitting at 449.45. I think that's going to be your next big technical support. I wouldn't really be a buyer there. I think you would need to fill this major technical gap, and it likely should coincide with this technical support level for a bounce. Needless to say, the resistance lies pretty close over here. We still have a very inside wide range red bar reversal. 2 inside days, we've yet to get above that reversal candle, and the volume is starting to peter out. Now, if you get a daily close above that, your next resistance really is still trading at this 462 pivot. So there's R&R, risk to reward. There's not really too much upside left in terms of what I think is going to be a little bit more of a pullback. I would love to see this pullback down to the purple moving average here, the 50 daily moving average, but it's not a matter of what I like, it's a matter of what the price action happens. But that would be super healthy. One thing I want to point out is you do have this relative divergence, this negative divergence. So you can clearly see here on the RSI indicator, right from this June 15th high, we've been making a series of lower highs on the RSI. However, the price action has been trending higher really since. So that's a negative divergence. You really want to be paying attention to that because it could mean that some sort of a divergence is going to play out to the downside, where we see the SPY drop a few percentage points, and really it needs to. That would be a very, very healthy pullback if it were to remain in a technical uptrend and hit somewhat of the 20 or the 50 moving average or somewhere in between there. That would be super, super healthy. Now, if we just consolidate sideways for a few trading sessions, then it does likely mean we should push above this high pivot zone. All right, let's move along to the QQQ. Also a little bit of a negative divergence on the RSI. You've been trying to make these higher highs, and really if this fails to make a higher high along with the RSI, I think we're going to see, again, a pullback down to the 50. You've yet to break below this pivot. That's going to be a big pivot. There's a high influx of volume that traded on these 3 candles, so that's going to be a big level. If you start getting a daily close below that pivot, look for the 50 daily moving average for your next support and technical bounce. In terms of resistance on the upside, again, it's going to be this major high pivot. If you get a daily close above that, you're really going to be challenging the previous all-time highs in the QQQ. But again, negative divergence, pay very close attention to that aspect of the market. Obviously, we still have Apple earnings to report, so that could basically blow this market to the upside or to the downside, depending. I mean, this is one of the tightest wedge patterns that I've really seen in my trading career, and it just keeps getting tighter and tighter and tighter. It probably seems that Apple's really only going to break out of that wedge or to the downside come the earnings report. So we're going to have to really pay attention to Apple and see how that is, because the old saying, basically if Apple goes, so too does the market. All right, let's move along. Small caps were strong today. The IWM basically made another daily closing high over here. So let me just erase some of these trend lines to clean up the charts here, shall we? So you can clearly see we have this down-sloping trend line, which connects 1 pivot, 2 pivots, 3 pivot price action, and we've gotten above that. And what's interesting is on the IWM, it's now above its wide range red bar reversal that happened on volume. And then when you look at the SPY, SPY, it actually hasn't closed above it. It's wide range red reversal, and neither has the QQQ. So what that tells me is the Russell 2000, the small caps, is likely going to be the place to be. Our members were able to bank tremendously on a few plays. We banked about 17% on Canopy Growth, entering at that 43.50, selling above the 51 cent level, and we banked tremendously. Now, just due to what this price action, I do think that Canopy Growth is still oversold. I think there's a chance with, especially if we start to get market chatter, political chatter, campaigning noise, I think we can at least come up to the gap fill on CGC, but our members were able to bank tremendously on that trade. Another small cap winner that we were able to bank on is Metamaterials. I actually love this chart so much. We were able to close another 16.1% today, and the trade is now risk-free. We have runners in the trade, so I'm letting this run. But ultimately, I think Metamaterials, MMAT, can actually have a technical move all the way up to 38 cents on the chart. So even if you were to simply buy in from that, I mean, you're still talking about a potential, 50-60% move from the current price action. But beautiful basing formation. You made that higher low, you had a positive divergence on the RSI, you had a nice little bull flag, you can see your flag, consolidation right on that breakout trend line, and then boom, a pop on huge volume leads to a technical breakout. First resistance is going to be up at this 29-cent level. You can see we almost tagged that level. We made a high of around 27.50. But I do think that once we get through this level, then it's really smooth sailing up into that gap, and you never know where this thing can go after that. So this is one of my favorite trades that I am watching very closely, and we did make a nice net gain on that particular trade. All right, let's move along to the interest rate markets. So we'll take a look at yields. The US 2-year yield basically saw a little bit of a pause consolidation day. Now what's interesting about the 2-year yield, we're teetering right above that previous pivot. So this is when inflation really started peaking and coming down from its 9.1%, and we're basically back at that level, although inflation is, the headline CPI is still at 3%. So again, you have to ask yourself, why are rates still at the same level, but inflation is well off of the highs? So that's what I want to ask yourself. Inflation's at 3, it was at 9 over here, but yet rates are pretty much at the same point. And what that's telling me is the bond market maybe believes there could be a second wave resurgence of inflation. Even the long end yields, if you take a look at, say, the 10-year, that had a little bit of a positive gain today. That chart is looking super healthy. You had this technical breakout over here, you confirmed. You had a check back, never actually confirmed the breakdown, even though you had pretty bearish chop here, and then you had a big reversal to the upside. And this is looking like it wants to have another secondary breakout. The next resistance is going to be this downsloping channel. I mean, if you get through this, if you get a daily close above this trend line, it likely means that the 10-year can move up to 4.33. If the 10-year, if the long end yields start losing control, that is something that is going to be very detrimental to the market, to real estate, etc., and assets, because they really can't control the long end. And what that means, if long end yields are continuing to grind higher, that means that the bond market is pricing in inflation being entrenched in the system. So we have to be very careful about how economic policy is going to move forward, especially if long end yields continue to climb. That's pointing to inflation being entrenched. All right, the 20-year yield is looking very poised to break out. You had your wedge pattern, it broke out to the upside, and you've just been trading above all the daily moving average. Even on the weekly chart, this chart is looking very, very much poised to move higher once again. And if you get a close above these wick highs here, especially on a weekly basis this week, you're likely going to challenge the previous all-time highs. And you have to wonder, what's that going to do to banks? What's that going to do to the regionals? Maybe they're okay with the backstops from the discount window, but certainly it's not going to bode well. Let's look at the dollar market. So the DXY is looking to continue to consolidate and move higher. I still think at the minimum we test the 50-day moving average. You get a daily close above that. Your next resistance is going to be the daily 200 MA, sitting at 103.73. Let's move along to gold. Gold had another little inside day, still inside of its previous hard reversal, hammer reversal engulfing candle. So until you get above that, you have to expect a little bit more of a sideways consolidation to occur. I still have a downside target on gold of low 1900, around 1916, but the trend lines that I'm watching closely is really this upsloping trend line now. So I'll erase that one. You can see this pivot from November 2022, this chop over here. If you get a break of that trend line, it could mean gold's going to cycle down to the low 1800s. But right now you're kind of in this inflection point in gold. If I actually remove some of these key trend lines over here, I'll show you the little bit of a wedge pattern. So it's going to be a decisive move at some point. You are creating pretty tight to the apex of the triangle. You can trade a few more days, but really, if you get a close above this, you're going to test the all-time highs. If you get a close below, you're probably going to test this next support range. So gold right now is at a key inflection point. Let's look at how the miners are performing to see if we can get any insight. Right now they're holding up okay, but I'm very nervous of this pattern. You have a beautiful left shoulder. You have this head over here, which also is an M-top pattern, and you're forming this long developed right shoulder. So again, I'm a little bit skeptical about gold right now because I do think that the dollar has a chance to move higher. On the weekly chart of gold, you are trading below the weekly 200 MA. I don't like that at this point in time. But right now it's still technically holding the daily chart patterns and it's living to fight another day. We'll just have to really pay attention to it closely. All right, let's move along to natural gas and then the oil market and Bitcoin. So natural gas, let's move along. Natural gas had pretty much an inside day. It was negative today and then it went positive, but basically still putting in this consolidation pattern, I believe, to move higher. You've been forming such a big base. The bigger the base, they say, the higher the space. So basically, I think this little bull flag pattern, this inverse head and shoulders pattern, you've been holding the neckline. I do think that there's a stronger chance it breaks out to the upside. It is one of the more oversold commodities out there comparing the DBC basket and other commodities. It's one of those that I think have a higher risk to reward ratio being net long. WTI crude, look at this surge in oil. Oil is just continuing to climb. I've noticed gas prices going up here in Canada tremendously higher. And look at this move in oil. I mean, we've had simply in about a 2 to 3 week span, you've had a move from the low of 67 to 81. That's almost a over 20% move in oil, and that's certainly not going to help the inflation fight. I mean, that next headline number in the energy complex should be skewed to the upside because of this recent move in oil. So pay attention to that closely, because if oil starts consolidating sideways and putting in a nice flag pattern, it means that there could even be more upside to come. Let's finally look at Bitcoin to finish this video. So BTC USDT, what I'm noticing here is Bitcoin putting in a bear flag. This is not a healthy pattern. You broke your initial consolidation, had a hard sell off to the 50, getting wicked and closed below the 50. I'm noticing a lot of wicks at the top of these candle. This is looking like a bear flag. It looks like it wants to move down to the low 27,000s. The interesting thing about Bitcoin is if you actually look at Coinbase today, it was strong. So Coinbase, let me just, again, my chart's super messy here, forgive me, but Coinbase is actually putting in a potential flag pattern. And what's interesting about this is you've had this negative divergence. You've had Bitcoin trending lower, but the crypto stocks like Coinbase, Mara, Hut Mining, they're all trying to move higher and put in bull flags to the upside. So one of these patterns are lying, being the fact that these stocks are being front run. They're front running the actual underlying commodity or the actual underlying asset, Bitcoin. It leads me to think that these are going to have a hard sell off to the downside. And again, you have earnings approaching. Stocks are elevated in comparison to where the actual Bitcoin price is. So you have to be careful. If Bitcoin flushes, those stocks could have a much larger correction, being the fact that I think a lot of people are thinking Bitcoin's going to move higher right away. And it could. I mean, the weekly chart pattern on Bitcoin is still technically okay. Despite you have that bear flag on the daily, the weekly actually is forming a little bit of a micro bull flag right underneath the weekly 50 MA. But you're at tons and tons of resistance, and you're at a really big inflection point here in the crypto market. Why I say that is because this trend line sitting here at around 29.5 was your massive support level multiple weeks over here, was your massive consolidation range over here, your massive breakdown range, your massive resistance range over here, and now you're consolidating right on that key support level. If you start getting a close below that, it favors lower price action. Right now you are holding above it, so if you get a few more weeks of consolidation, this flag pattern on the weekly chart could break out to the upside, which is maybe what the Coinbase investors are kind of seeing in the price action. There is a little bit of an inverse head and shoulders on Coinbase, which is why it's so strong. You can clearly see left shoulder, head, right shoulder, breakout. Upside target actually takes you to about 138 on the charts. So just pay attention to that. Shorting here after multi-week consolidation on coin can be risky. I would limit it to only day trade potentials. On that note, thank you all for tuning in. Please give this video a big like down below. Check out our website at tradingcapital.ca, and definitely look into some of our research insights. And if you're looking to gain more trading insights, live trading insights, we do have a Telegram chat group that we issue live trading alerts and opportunities, just like the ones that